because of the main point is a central bank. Okay, so in the meantime, if I go not like that. I know it's not ideal, but so what is a financial? What is a central bank? So basically, and in US, it's called Fed. So basically, central bank and Fed is the bank of the bank. The main mission of the Fed, Federal Reserve in the US, or European Central Bank in Europe, Bank of England in UK, BOJ, Bank of Japan in Japan. Their goal is to basically control the money supply. So what does it mean when I say it controls the money supply? It basically means they control the amount of money that is circulating in the economy. So how do they do that? Well, they set the rates at which the bank borrow money and at which they are their savings are, the bank savings are rewarded, and also it basically that. And also they buy and sell assets on the financial market, but only in the secondary one, not in the first. But it's a bit complicated. We will go more deeply into detail probably next stream. So basically, the controlling of the money supply by the Fed has a big effect on the economy of the country and also on inflation. So that's why now they're having a restrictory money policy. It's because now they want to reduce the total money supply and reduce the inflation. So we're gonna quickly talk about inflation and say what it is. Basically, the inflation is the rise of the price you need to pay for things. It's basically the amount of which the price raises. We can basically to measure it, we basically select a basket of goods and service, and we measure the evolution of the price of these goods and services. The goal for basically every central bank and every financial institution in the world is to have 2% inflation. Because if the price goes down, nobody invests. Because why invest if you just have to wait for your money to gain value? Therefore, there's no money that's circling in the economy, and therefore company can't invest, can't open businesses. There's lots of reasons why it's dangerous for the economy. So central bank will always want, you always need a little bit of. Is it still working? Yeah, okay, it's working back. So I was talking about what is technical analysis. It's the study of the price movement. It's basically a study of the price movement, and it's basically reading the chart to be able to anticipate of the future movement. In a easy summary. So there's a lot of ways to do technical analysis. But the very first point of technical analysis is trend. What's the trend? Because a price movement of a market is not linear. It goes up, it goes down. It doesn't go in a straight line. Up, down, up, down. It have a movement. But so knowing that, knowing the general direction of the price is quite important. Knowing, is it going down, is it going up, even though there's like some some move inside the trend. The basis is there's like three type of trend: upward, downward, and lateral. An upward trend is when higher lows. I can't, no, I'm gonna try to show one to you, that's quite obvious. Yeah, yeah. Well, here, from here, well, actually, this is an upward trend. We can see we've got higher highs, higher lows, and basically the price is going up, even though if you zoom, there's some time when it's going down. On the opposite, this is a downward trend. We have lower lows, no, lower highs, and lower lows. I believe it's pretty clear. And also inside the trend, there's another trend. If we look from here, like we have here and here, lower high, we don't have a lower low yet, but most likely it's coming. So in maybe 1 year time, we're gonna have like S&P somewhere there. But that's highly hypothetical. And then there's a range, and a range is when a market is moving sideways. For example, here on this, on this part here, it's a range. We can also see them in shorter time scale. Like here, we can see the market is ranging inside that those technical level. So this is basically not the best idea to trade those points. Well, basically you can't see, you can just hear me, but I tried to show you on the screen. So yeah, and basically an upward trend is when buyers are driving the market. So there's not more buyer, but more buying pressure. And meanwhile, when there is a downward trend, it's when there's more selling pressure. So basically, the sellers are more. It's more important for the sellers to sell their. I'm connected, but I think I'm gonna end the stream here because we are getting a lot of packet loss, very bad, like we were still stuck on the same image for like more than half an hour. So I don't think there's a big... I'm gonna hide the stream and everything. And thanks if you've managed to stay